Thanks for joining me this Friday, the 30th of May. I'm Grady market analyst with Bell Direct, and this is our weekly market update. Trump was back in the headlines this week, and subsequently markets reacted accordingly. No surprise there. We also had some key corporate trading updates move the local benchmark, so let's dive straight into the week that was. Trump's proposed tariffs returned to the spotlight this week, culminating in a major legal setback as a US federal court blocked the so-called Liberation Day tariffs. The court ruled that President Trump has overstepped his authority by attempting to impose broad import taxes on countries with trade surpluses against the US. The Manhattan-based Court of International Trade ruled that only Congress has the constitutional authority to regulate foreign commerce, a power that cannot be overridden by presidential emergency measures. This decision came in response to a lawsuit filed by the Liberty Justice Center on behalf of 5 small US businesses, marking the first major legal challenge to Trump's tariffs, and many more to come, we are sure. The businesses, ranging from a wine importer to an educational kit maker, argue that tariffs harm their operations, which is unsurprising. This case is just one of 7 legal challenges to Trump's tariff policies, including suits from 13 states and other small business groups. While the president can now appeal the ruling, markets rallied both during trade locally and in after-hours trade in the US as a result of the court's ruling on Thursday. Earlier in the week, markets rebounded from the late sell-off late last week of the previous trading week after Trump announced and subsequently delayed 50% tariffs on the EU until July. And in a turbulent week for Trump, his right-hand man throughout this whole campaign, Elon Musk, announced he is stepping away from politics to focus on his businesses, much to investors' relief, but not great news for Trump. Musk completed his 130 days mandate of service in his special government role, and his offboarding began on Thursday, US time. The move saw shares in Tesla rise over 2% in after-hours trade on Wednesday, US time, following the announcement. While turbulence is faced in the Trump administration on where the tariff turmoil goes from here, investors may finally have some stability and certainty on the horizon in the wake of Trump's tariff chaos collapsing in the courts this week. Nvidia's latest earnings results for Q1 were released this week, signaling demand for the AI movement is going from strength to strength, with revenue in the company rising 12% to $44.1 billion US dollars, while net income rose 26% to $18.78 billion US dollars, and that's just for a quarter of operations. On the China production front, Nvidia said it incurred a $4.5 billion US dollar charge in Q1 associated with excess inventory and purchase obligations of the H20 products, which are designed primarily for the China market. The stellar results fueled a rally for locally listed data centers this week, like NextDC late in the week. On the local market, investors are still reacting to corporate trading updates that were released throughout this week. Telstra shares rose on Tuesday after the telco giant reaffirmed FY25 guidance, expecting to hit the top end of free cash flow and capex targets, and the company launched its Connected Future 30 strategy, aiming for over 50% NPAT growth, stronger AI integration, and middle single-digit earnings growth at compound annual growth rate by FY30. Sorry, lots of words there. Select Harvest also posted a first half trading update this week, outlining the company is back in the black, with NPAT of $28.7 million posted during the half thanks to tightly managed production costs, higher prices of almonds, and improving operating cash flow. Naturally, all eyes this week were on April's all-important monthly CPI release, which came out on Wednesday. The data showed that Australia's inflation rose to 2.4% over the 12 months to April, exceeding economists' expectations of 2.2%. While still within the RBA's target band, the upside surprise sparked concern in the markets. Investors reacted with a sell-off, worried that inflation may be rebounding, potentially driven by the implications of renewed tariffs in the Trump era and the recent rate cut by the RBA. Locally, from Monday to Thursday, the ASX 200 posted a 0.73% gain, led by the tech and energy sectors rising over 5% each, on the rising price of oil and growth of investor appetite for growth stocks. Deep Yellow was the best performer on the ASX 200 this week, with a rise of 16.52% amid renewed demand for uranium stocks, while Block Inc. and Capstone Copper rose 15.78% and 14.38% respectively. On the losing end, Helios fell 11.56%, while New Farm ended the week down 10.65%. On the broader market index, the All Ords rose 0.78% this week as a 38% soar for 4D Medical on FDA submission offset a 28% tumble for Bougainville Copper. The most traded stocks by Belderag clients this week over the 4 trading days was BHP. Clients also bought into Fortescue, Woodside, Dateline Resources and Boss Energy, while taking profits from CBA, Macquarie, NAB, Evolution Mining and Qantas. And the most traded ETFs by our clients were led by Vanguard MSCI Index International Shares ETF, iShares S&P 500 AUD ETF and Vanguard MSCI Index International Shares Hedged ETF. On the economic calendar front next week, we may see investors react to the latest RBA meeting minutes out on Tuesday, Australia's latest GDP growth rate data for Q1 out on Wednesday, and Australia's trade balance data for April out on Thursday. Overseas, key US jobs data is out next week with the expectation of a decline in job openings. And that's all for this week. We hope you have a wonderful weekend and happy investing.